today I really want to drive home the point of what I call the 50-yard pass. Now, that's not an official name for it. If you talk to other traders, they're like, "What the hell are you talking about?" It's just a name that I created for a little strategy that I use with the zero gravity method. It's just something that I add on to it to make my win loss record a little bit higher. So this is actually the trade that I just took and lost. I think I lost it by like a second, so I'm just going to enter this trade again. I know it's about to reverse in my favor. That's the standard zero gravity. You know, the price goes below the Keltner channel. Right here, you can see it's in oversold conditions in the stochastic oscillator. You see that the stochastic oscillator lines crossed each other, plus there's a healthy distance between. That's what I've been teaching since I don't know what April or May, March or April of this year of 2020. I've been teaching that strategy. Just doing that, it's simple, and most of the time it's going to work. Of course, there's always fake outs, right? And I always say to look for consolidated markets. Now, what's a consolidated market? Consolidated market is pretty much, you see the price making a sine wave. It goes up, it goes down, it goes up, it goes down. There's no long-standing downtrends or uptrends. But if you want to make this strategy even more effective, what I do, because at the beginning I used to always say to avoid trades where the candles are kind of surfing along the top or the bottom of the Keltner channel. Now that was when I was a little bit less experienced, and I was just really trying to get like the full range of the Keltner when I was entering my trades. However, if you really know what you're doing, you can use long-standing uptrends or long-standing downtrends to your full advantage, and I'm going to show you how. All right, so like I said, like I said before, I used to always avoid these long-standing uptrends. Something like this, I would avoid because it's surfing along. But with the zero gravity method plus this little tweak, you can increase your win rate like that. And let me show you how. This is what I call the 50-yard pass. Right here, you see an uptrend, right? Long-standing uptrend for about 15 minutes or so. When you see something like this, I think I just won that one, and I won those two. Perfect. Okay, so when you see something like this, which is the long-standing uptrend, you can actually take advantage of it, because instead of trading, because you see it's oversold, right? Sorry, overbought, right? It's just long-standing overbought conditions, and you're waiting for that moment. You're like, oh man, I keep doing a put option because it's it's above the Keltner and it's above the stochastics, so I'm going to do a put position. And what you'll notice is a lot of times you're going to lose those positions, and the reason you're going to lose those positions is because it's a long-standing uptrend. The upward momentum is just too powerful. The gravity is all trending upward. That's why I named zero gravity, because each component has its own gravitational pull, so to speak, right? So with the 50-yard pass, you're actually trading with the trends, and you're relying on reversals. But instead of relying on reversals, say down here at the bottom of the Keltner, or at the bottom of, it's not even at the bottom of the stochastic, but you get what I'm saying. You instead, when it's a long-standing uptrend, what you could do is when you see a red candle hit the 50 line, you could do a call position. And as you can see, you'd win that position. Hit the 50 line here, you do another call position, and you've won. Now, don't just blindly do this. A clear-cut way to know, and this looks like it's literally about to reverse back down. It's so funny. But anyway, a clear-cut way to know if you're about to hit a 50-yard pass and it's actually going to connect is always look at the price action. When you see longer wicks, something like this, especially something like this, you know the upward momentum is about to just keep increasing. And it doubly goes for if you see two longer wicks at the bottom, right here. See, let's say in this red candle, right, and you see a long wick there. And then you start to see this next candle form, and it's making another wick. That is a clear-cut 50-yard pass. Now, these are just like the generic examples right here, but I really want to show you all a good 50-yard pass. So I'm just going to keep searching to find one for you all. Now, something like this would be a 50-yard pass, but the problem is I missed the entry point for that. So let me see if I could find some more for you all to see. This looks like a really good 50-yard pass. You can see there's a lot of long candle wicks below the 50, which is a sign that the buying pressure is starting to increase and the selling pressure is starting to decrease. So once it hits this 50, I'm going to do another entry point. There it is. I go up. And if it hits this point below again, I'll do another entry point, but I think we're good. All right. Do another entry here. See how it's reversing right here? Now something Now something like this is the perfect example. Let's see. You could see the stochastic, it's right around the 50 mark. You can see the candles are starting to reverse right here at the 50. It's a long-standing uptrend. The candles were kind of dancing along the top of the Keltner, which is letting me know that it's majority of the time it's just going to be an uptrend. So let's see. It should be a reversal right at this 50 line. And again, what I do is anytime it hits that mark, I just do another entry. And again, do not do 100% of your account. Please don't. Don't have all the entry points that you have on the chart at the same time add up to more than 10%, especially if you're just starting with this. I don't recommend that at all. But we should be good. I lost that one, but I should win these other ones. See how it reversed right at the 50 because I see it's a long-standing uptrend. Now another thing to look at is to look at the wicks. Now it didn't really matter in this case, but a lot of times what I like to do is I like to look and see which direction has the longest wicks. And you can see here there's really long wicks below, which means that there's a lot of buying pressure, which means it's going to be more likely to keep increasing. The price is more likely to keep rising. So let's see. Just won that one. And just won that one. Really good stuff. All right, and we're going to move on because we won that one. Let me steps out. Something like this, I would, even though I know the price is about to reverse up, I probably wouldn't because I can see that there's a lot of long wicks at the top. Now this is obviously going to reverse back up. That's not what this lesson is really about today, but it does help out. You can see that it's a nice consolidated market, but you can see that it's starting to trend down. 3 seconds left on this candle. Long wick. See the two long wicks? You can see two long wicks at the bottom. That means that the price is getting ready to start increasing. But this isn't using the 50-hour pass. This is just a standard zero gravity reversal. You look at all the signs, all the confirmations, but it would be more powerful in this type of, when you see that the candles starting to go down, it'd be better for you to only focus on only on put options or sell options. Everyone says something. Every broker has like different terms. You focus on down options in this case because you can see this trend is starting to go down. But because I could see there's a healthy distance between the stochastic oscillator lines and they're getting ready to intersect, I'm just gonna do a very educated guess and see that the price is getting ready to reverse. It's a pretty good consolidated market. So we'll see. And the price, yeah, and the candle, and the lines just intersected. So we'll see. Under normal circumstances, I would probably not do a trade like that, but we'll see. But again, it's all about those long wicks. The long wicks are really what's going to tell the story, because that lets you know where the pressure is. As you can see, long wicks here, there's a lot of pressure to buy. You can see right here, healthy distance, so I should win this one. The payouts for the live pairs is really bad right now, so I'm just going to probably do a couple OCCs. This is looking like it could be a good 50-yard pass right here. Actually, no, the price is about to start sinking for a little bit longer. So I'll just keep this one open. Got 10 seconds left on the clock, and I should win these two trades. Now, this is a long-standing, it's not really a long-standing downtrend, but I can tell that once it hits the 50, the price is going to reverse. And the reason I can tell is because you can see the price, the candles, pretty much the highs are lowering and the lows are lowering. So it's like a consolidated market, but it's a downtrend. So it's still giving you nice, neat sine waves, but it's trending down. If that makes any sense. See, it's a sine wave, but it's starting to trend down, which is really good. I always like those because they're a little bit more predictable. You can see the selling pressures coming. See that really long wick? So if I would have entered at the 50, which I didn't, because it didn't really hit 50 that hard for me, but you could tell the price is about to reverse really hard now because, again, the selling pressure of the long wick. The wicks are so good at predicting things, I'm telling you. I would have probably hit it if I wasn't explaining it to you guys, but you can see. So something like this, again, a long-standing downtrend. I would not, a lot of people, what they do when they do the zero gravity when they first start out is they're just waiting for that moment where they could just enter and get a nice green candle and win. No, don't do that. If you're going to trade this, only trade downs / puts / sells and wait for it to hit this 50. Don't enter any trades until it does. And once it hits that 50, you can do a nice put position and you're most likely going to win. Of course, the price will eventually go up, but why wait for that? Like, why try to fight the trend? It's trending down. Only trade with the price going down. So don't even bother with this. Once it hits the 50, you can even set notifications. It'll send you like a notification once it hits there. And once it hits there, you can enter a put position. So something like this. As you can see, that this just isn't really something I would do anyway, just because the price is moving pretty horizontally. As you can see, there's not too much upward or downward movement, so I wouldn't even mess with that one. I'll see if I can find another good 50-yard. Okay, this is perfect. You can see the long candle wicks at the bottom right here, and the price is pretty much hitting this 50 and reversing. So I'll wait for it to hit around here. I'll do a notification for myself. Once it hits here, I'll do an entry point. This might just be a 20-yard pass. Those do exist too. That's when you see the price, it gets to about here, 25 really, and it just reverses right at the top. Those exist too. I don't like to take them because they're a little bit harder to read, but you could definitely make good money with that. I don't do it, but you could. Gets to about here. And when it gets to here, I'm going to do one. Okay, it's at the 50. Long-standing downtrend, as you can see. Now, again, I'm not spamming entry points. I want to show you what I'm doing, because a lot of people get confused and think I'm just entering over and over again with no rhyme or reason. I'm recognizing this as my reversal point. Anytime the price hits that point again, I just do another entry. And the reason is I might win one entry, I might win the second or third entry, but lose the first entry. It happens. Either I run out of time, or the price just takes a little bit longer to get to where I need it to go. So, and then and if you win them both, even better, right? Let's see how much time is left on the clock. I have a minute left. You can see a little bit here. There's a little bit of divergence here, but nothing, I don't think there's anything in the home, the right home about it. It's not that much. There's a lot of long wicks here, as you can see, like a long hair. So there's a lot of selling pressure for the most part. There's only a couple of long wicks at the bottom, as far as buying pressure. So that's why I entered here. So that's another thing to look at. Look at like the majority of like where you see long wicks at the top. That lets you know that there's a lot of selling pressure. If you see a lot of like a sea of long wicks at the bottom, that means a lot of buying pressure. So all these different things, you just glue them all together, and then it can really help you out. Okay, we have 10 seconds left. Price is about to start sinking like crazy, which is really cool. Just won that one. So that's a 50-yard pass, guys. That's all it is. See a long-standing trend. It's most likely going to retract itself a little bit, retrace its steps just a little bit, and once it hits the 50, it's going to reverse. And always look at the way the wicks look. That's really good with price action. Always look at your stochastic oscillator. You know, when you see it, they look like they're about to intersect. That's always another good way to look as well. And when you see the candles hit the 20, you know, when they hit the beginning of the counter and they reverse back down, you know that you're going to be in a long-standing trend, whichever direction. If it's at the bottom, you're in a long-standing downtrend. If you see it reversing at the top, you know, right here at the top, you know you're in a long-standing uptrend. So just keep those things in mind. Hope this helps you all out. Okay. Again, you don't have to be a master at everything when it comes to trading. Just find one or two things that you like, that you relate to, that you could understand and get a good grasp of. And keep those little tools in your toolbox, and that should help you all out. All right, everyone. Have a great day. Stay positive. Stay blessed. As always, take care. Peace.